Okay, since the Bank of Canada cut interest rates this morning by 0.5%, I've been flooded with messages and emails regarding whether or not people should now lock in their mortgage, if it's coming up for renewal in the near future. One thing I'd like to point out is that fixed rates do not always move lower when the Bank of Canada cuts interest rates. Fixed rates are based off of the bond market. Their prices are derived from the bond market. The bond market moves based off of future inflation expectations, okay? The variable rates, they move lower or higher based on what the Bank of Canada does with their interest rates. Okay, so we got that out of the way. So this morning when the Bank of Canada cut interest rates, if the market thinks that the Bank of Canada has cut interest rates enough to stimulate the economy, the fixed rates are not going to move lower, because what's going to happen is the bond rates are going to move as if inflation could go higher over the medium to long term, because they've stimulated the economy enough with these interest rate cuts, or with maybe the next interest rate cut that's coming. Okay, so what we saw today is very similar to what happened in the US last month. The Federal Reserve cut interest rates 0.5%, which kind of surprised the market, and the market didn't believe that that was warranted, and all of a sudden the market started pricing in higher inflation next year. If you see here, the US 10-year has rallied considerably since mid-September when the Fed cut interest rates. But also driving this is the election. It looks like Trump is going to win the election based on the polls, and his policies or his economic platform is more inflationary than Kamala's is. So that's also driving the US rates. But with Canada, we don't have the elections per se, but the US election does have an influence on Canada as well. So that could also drive rates higher. But anyways, if we look here at interest rates today, since the Bank of Canada cut interest rates by 0.5%, the bond rates haven't moved lower. They've actually ticked higher, okay? So bond yields, if you look at the 2-year here and the 3-year and the 5-year, the rates are actually higher on the day since the Bank of Canada cut by 0.5%. So this just goes to show you that just because the Bank of Canada has cut interest rates doesn't mean that fixed rates are gonna move lower. So if you prefer a fixed rate and you have your mortgage renewal coming up in the near future, I would not be relying on the Bank of Canada cutting interest rates to guarantee you're going to get a lower rate. The environment we're in right now might actually be the best environment you're going to see in the near future for fixed rates. If you're looking for variable, well, it doesn't really matter, because you're going variable, the rates are going to move up and down. So the point I'm trying to make is, if you're trying to time when you renew your mortgage because of the upcoming interest rate cuts, you may be mistaken and surprised on what rates do following an interest rate announcement from the central bank. Take care.